who needs an audit?
So basically the 5,500 is what drives the audit.
Okay.
So if you file a 5,500 as a small plan based on the 5,500 instructions, you do not need an audit. But if you hit the milestone of 100 participants, as it's defined in the 5,500 instructions, which currently means anyone who's eligible to participate in the plan, whether or not they're participating. So you could have 100 eligible people and only 20 are participating, you still have to have an audit. Now that is changing as of 1/1/23. And so that's going to help a lot of employers out because as of that date for the 23 5,500, it will be based on people with account balances only.
And it could be account balances less than 5,000. They're still account balances.
Just any account balance. So that includes current employees, previous employees that still have an account balance in the plan. And that will be what drives the number. And it's always based on the January 1st number. So we get a lot of people that call us in end of September, right before the October 15th deadline. I just found out I need an audit. Actually, you know that as of January 1st, because that's what the determination is.
Okay, so I want to ask you a question on that. So when we do census, right, at the end of the year, we do the census for the actuary to figure out the numbers. We're looking at who was employed on December 31st. So there's a second census then that's got to be done to see who's going to continue January 1 if we're talking about plan audits, right? So help me understand this. If the requirement is you have to have 100, what do we say? Participants or eligible participants.
Well, right now, yeah, it's eligible participants.
But this year it's changing.
Yeah, for 23.
Yeah, it's participants, right?
Yeah.
If you have 100 participants, you'll know that's taking into account who's going to be an eligible who's going to be a participant on January 1st of 2023. Okay. Yes. So they know right away who's, if they're going to need an audit. And even if those folks are going to, we have a lot of people that retire, let's say at end of January or end of February, it doesn't matter. It's whoever is in play at that point. Okay.
And that's for that year. So January 1st, 2023 determines if you will need an audit for 2023. And then you'll actually have that audit in 2024. So we're always working a year behind. We never know what year it is because, we're working back in previous years. We're looking ahead to, upcoming years. We're working in the current year.
Yeah. Just to set this table here, when we're filing 5,500s right now for plan year 2022, what you're talking about here is if they have 100 participants in January 1, 2023, that's going to show up for plan year 2023, which is filed in 2024. Yes. That's right. Okay. And so the purpose of doing an audit, I think we've talked about this, is not it's a nice to have, it's you have to have it, right? So what are the rules on that? So who needs it? We talked about you have to have 100 people, but you can't file the 5,500 unless an audit is done, correct?
Correct. Once you hit that threshold, you file as a large plan, and that schedule, there's a Schedule H that goes with that Form 5,500, and that requires the audit. Yeah. That's where that comes into play.
Even if a client tries to file it and they have the Schedule H, it rejects it. It kicks it back and gives them notice like, hey, we see you have a Schedule H, so where's your audit that it's supposed to go with this?
Yeah. And we know the consequences of not filing your 5,500.
Yes.
They're not good. Yeah, what happens then?
Yes. There's lots of penalties. And they are daily penalties.
Daily penalties, that's right.
$50,000, yeah.
Up to you.
And they will assess them. I've seen it.
Yeah. And then doesn't that also potentially require an audit from the DOL?
Yes. You will get a visit from the DOL most likely.
Yeah. And that's not fun.
That is
nobody wants that.
Yeah.
We're much nicer than that.
Yeah. And ultimately, the responsibility falls on who? Is the plan sponsor?
Yes.
Right? So the employer and whoever they've designated as the plan administrator.
Which, honestly, we try to educate our clients that everything falls back to the plan sponsor. No matter who you hire, what third parties you have in play, it's still up to the plan sponsor. And that's who the DOL is going to be looking at.
Yeah. And when you say the plan sponsor, so let's say you have Company Inc., Company XYZ Inc., it's the Inc. itself, but also a designated officer, correct?
Yes. Yeah.
Yes. I mean, normally, some of the companies will have formal committees that have governance over the plan, or maybe it's just a couple. It's the CFO and the controller who are the plan administrators or listed as trustees or whatnot. But yeah, I mean, like Jennifer was saying, ultimately it's the plan sponsor, who's ever listed as a plan sponsor in the document. That's who it falls on.
How often do you find that when employer or plan sponsors, the first time they figure out that they need an audit, it's when the TPA tells them, hey, by the way, you need an audit. And they're like, wait, what? How often does that happen?
98% of the time.
90%, yeah. And are they kind of like deer in the headlights? They don't even know what to ask?
Yes.
Yes.
And those are the ones that are coming to us at the end of September with the October 15th extension deadline in a panic because they were just told, even though lots of times the TPA has sent them multiple emails throughout the year saying,
nobody reads those.
An audit.
Nobody reads those.
And so we say, it's going to be okay. We can help you. And what we find is that I find funny is we can get those audits out much faster than the ones that we start in May.
Really?
They know they're up against a deadline and they're very responsive. They're providing us everything we need. And those audits get out pretty quickly.
It's the most bizarre thing I've ever seen.
Yeah. Their feet are under the fire.
Yeah, because they're scared, right?
Yeah.
Yeah, that's awesome.
We were talking about 5500s, but what actually goes into the 5500? And who are you sending the 5500 to? Is it the IRS? You're talking about the DOL? Who kind of uncrack that for me.
So their third party will prepare the 5500, and so that's part of what we look over and we're auditing. And then when everything is completely done, the client's the one responsible for filing, and normally their third party helps them as far as filing it with the DOL.
But what goes, besides the company name, what information is going into the 5500 that you're checking?
It's listing. Well, so there's different schedules. It all depends what's in the plan. But basically we're responsible for checking the Schedule H that has the investments and shows all the plan activity, the contributions, distributions, expenses, is the auditor opinion, information checked correctly. If they had late remittances, if they had, fidelity bond, all those things, we're making sure all the boxes are checked. But we also still check over the other schedules before that just to make sure that nothing looks off, or maybe there was a change in the plan sponsor name and it didn't get updated on there. So we want to make sure we catch all that too.
So the 5500 is an informational form because these plans don't pay tax. And so there's a lot of information. Basically, it's the IRS and DOL together gathering information. So it's an IRS form, but the Department of Labor kind of has oversight over that process. And so it's a lot of information about the plan, what size it is, what the participant counts are, as well as financial information, what kind of investments this plan is in. Because if you're in some kind of crazy investments, they want to come visit you for that also. We do see that, not as much as I used to, but every now and then there'll be something crazy in there.
Oh, I could tell you stories about that where I've had, I don't know how much I should be disclosing here, but I've had people, let's just say, I've had people ask me, hey, why can't we include this particular class of assets into the plan? And I'm like, because you don't want to get a visit. It's that simple. You can't you can't manage the plan for your benefit. You're the fiduciary here. Right. You have to do it for the benefit of the participants. So let's talk about the audit. Okay. So TPA says, hey, you need an audit. And they're like, okay, who do I call? First thing they want to do is pick up the phone call and call their CPA. And then they find out CPA, not only your regular CPA doesn't do these audits, they don't even file the 5500s. They don't even know how to file the 5500s. So how does somebody go about finding, obviously, we know you guys do it now, but if I'm a plan sponsor and I understand that I need to go find somebody to audit my plan, how do I go about that process of finding somebody who knows what they're doing? What am I looking for?
Well, normally, what they ask their third party, like, do you have any referrals? And then that's when they reach out to us. But the referral, their third party should be kind of coaching them or guiding them too. And so what we'll see a lot is the questions we get asked is, how many plans do you audit? How do you train your personnel? Are you properly licensed? Do you belong to the audit quality employee benefit plan audit quality center? Like, what are your qualifications? Because there are some firms out there that maybe just do a handful of these. And so that's where you can kind of get into trouble if they don't do too many. So they're not keeping up with the rules and regulations and things of that nature.
Yeah. And what are some of the management's responsibilities when it comes to administrating this plan, in particular, going out and finding somebody to audit? Because ultimately, it's not just about getting an audit, it's making sure that they protect themselves. So what are some of those responsibilities that they have?
I mean, management basically has a responsibility to protect the participants in the plan. And so one of the biggest things is, we talk about hiring a quality auditor. That's a huge thing. The AICPA actually has a really good document that they put out for anybody to use that gives a lot of qualifications that they should look for, as well as a whole, RFP process if you're going to get proposals. Like what we see is when we are called, lots of times there's a formal proposal involved that we'll do. There's a formal set of questions that they're asking. Sometimes it's just a phone call. Sometimes it's just give me a fee because that's all we care about. It's kind of all across the board. But management always has a responsibility when they hire third parties to hire reputable third parties. And so as far as auditors go, you want to make sure that you're not hiring a firm that's just dabbling in these. Department of Labor doesn't like that at all. We attend the AICPA conference every year, and so does the Department of Labor and the IRS. They send individuals to speak, and they're always saying, they're trying to get to these firms that just do a few of these to start, scoping them out, because there's so many rules and regulations that you really just can't. I mean, our audit guide is about that thick, and so it's a lot. And so we do about 140. So we haven't seen it all because I always see something new every year. I say we've seen it all, but we have a lot of experience there and know what we're doing.
Yeah. So, it goes back to that. Just because you have credentials doesn't mean you have the competency, right? And I know the IRS is, Circular 230, right? If you don't know it, don't do it because you could get yourself in trouble. So when you're doing these audits, and it's been my experience that despite the, best wishes of the company to keep things going along in a crossing their T's and dotting their I's, sometimes there's things that slip through the cracks, and usually points back to internal controls or the lack thereof. What do you see from that perspective that you think could help the average plan sponsor to make sure that they're, when it comes time to audit, that the audit goes smoothly? What kind of internal control, why are internal controls important, and what are some of those things that they could they could implement to make it as seamless as possible?
I mean, the biggest thing would be, make sure you have controls in place, first of all, and document them. Because from an auditor coming in, we want to see this documentation of what your controls and procedures are, because we have to get an understanding of that. And we also have to walk through some of them to make sure they're actually in place. But, your plan needs to have them, whether it's related to the payroll, HR, the accounting and corporate side, because it can help deter errors from happening and fraud itself. So having those good internal controls in place, making sure there's checks and balances, that, the one person isn't doing everything. There's segregation of duties and appropriate authorization, for funding and everything else. I mean, that's a big key.
So is this like a guide? Is this like for example, with, we talk about employee handbooks, right? Mm-hmm. Is this kind of like a handbook that they should have in place?
Some might. I mean, normally what we get is just some memos written in Word, a Word document, but they describe everything, and some are great. They're very detailed. Some we have to work with. Let's build on this, let's talk it over. But yeah, it can just be as simple as just a plain old document that just describes the internal controls.
In an ideal world, if I'm the plan sponsor and you're advising me, what should I do? Should I sit down and write a manual? Or should I just have a memo? What's the best practice you think would work, would be good to have?
I mean, I think it depends on to me personally, I think it depends on the size of your company.
Yeah.
And I mean, it's good to have something in place anyway, because, there's turnover or people take different jobs. So it'd be good to have something written where the person coming in can then have this, written documentation so they can pick it up and follow and not waste too much time, trying to learn the ropes, I guess.
Yeah.
Yeah, I mean, there's two different things we're looking at. There's processes and then there's controls. And so you should have a documentation of your processes for what Kim was talking about with turnover. And so somebody can come into that job and they know exactly what to do. And then within those processes, you should be documenting where are your controls. And one thing that we find that I hear a lot from our clients is, I've outsourced everything. Fidelity does everything for me, or whoever their third party is. everything's automated now. And so they have this view of, I don't have to do anything. I don't have responsibility. But again, it always goes back to the employer. You still have responsibility. And so there should be controls in place where you're making sure those third parties are doing what they're supposed to do.
Yeah.
And that's a huge thing that we're trying to educate our clients about, because everything is so automated now. It used to not be that way, but.
Right. And for the benefit of folks listening in on this, just for them to understand, because oftentimes I'll hear them say, well, my advisor's taking care of this. And then they'll say, wait a minute. Who's the TPA? What's the TPA? Who's the actuary? And they don't understand this. Who are the different players involved, or the service providers, that if I'm a plan sponsor and I'm sponsoring a plan, who are the different players on my team that I should have, or maybe not even should have? Who are the different players that are involved in making sure that there's a plan and it's up and running?
I mean, that's a great question, because there are a lot of players. There can be.
Okay.
There's all different kinds of packages out there. It really just depends. What we see is sometimes there will be a package where a provider does everything. They're the investment advisor, they're the record keeper, they're the TPA, they're doing all the functions. And then there's other ones. What we see with insurance products, a lot of times they need a separate third-party administrator to do the 5500 and do the discrimination testing. And so there'll be that additional party. And then sometimes there's an investment advisor who is advising the committee on what types of investments to put in the plan and those types of things.
So let's talk about the different functions. I think that's more important. So let's go through each one of those real quick, if you don't mind. So the first person, or the first function that a plan needs to have, I would argue, is making sure that you're compliant, right? Make sure the testing is done. So who's that person? What's that function?
That's the third-party administrator. That's
a third-party administrator. And part of the administration that they're doing is they're the ones that have the actuary, correct? Yes. That's running the numbers. Okay. In addition to that, you have like you mentioned, the advisor for investments. And then you have the auditor who's auditing what goes into the 5500. Mm-hmm. Okay. What other functions are there? Right. Maybe a plan consultant telling them how to set it up.
Also the record keeper.
The record keeper.
Actually maintaining the participant accounts.
Okay.
And a trustee.
Trustee
is keeping the assets.
Mm-hmm.
Custodian type
right.
function.
So you got the custodian, you got the record keeper, you got the third-party administrator, you got the auditor, you get the investment advisor, you have the consultant, right? And so some of them are packaged together, but there's different functions that need to be done. But ultimately, the responsibility falls back onto management.
Yes.
Okay. And so the plan audit is really designed to make sure that the plan sponsor doesn't get in trouble.
Yes.
Is that fair?
Yes.
Okay. So let's talk about when you go on site, okay, or maybe remotely these days, but when you're doing the plan audit, give me an example of what that looks like. Okay, what are some of the questions you're asking? What's the data that you're gathering? What are you looking for? Because then I'm going to ask you some questions about, this is the fun part, Jack. We'll talk about the big fails, but what are some of the things that you're looking for?
Well, so these audits are in two parts. There's a financial statement side, whole set of GAAP financial statements that gets attached to the Form 5500. And so there's that piece. And that's usually the easiest piece, because we get the information, the certified audit package from the record keeper, trustee, and those numbers are pretty easy to determine.
And so even though a company's financials are not GAAP compliant, or they don't even attempt to make them GAAP compliant, this needs to be GAAP compliant.
Yes.
Okay.
Yeah. And so there's that piece. And then the second piece where we spend most of our time is looking at participant information. We pick samples of participants who had distributions, took out loans, who are participating in the plan, just to make sure that whatever they wanted to happen is actually happening.
So in the case of, you're doing this audit and you're saying, okay, give me statements or give me records for these particular employees. And you're making sure that if they said, hey, I want 5% of my pre-paycheck going into this plan, it's going in there. Okay.
Yes.
Okay. And are you also looking at to see if they've given notices on time. So for example, at the end of the plan year, we'll have the TPA say, okay, all the participant statements are ready. Because, sometimes we have pooled accounts versus participant driven accounts. And they'll say, hey, the statements are ready. Please hand them out. And you have to do it by X number of dates. Do you go back and check to see if those are done? Is that part of the audit process?
Yes, making sure they're in compliance with the ERISA requirements. And yeah, I mean, we're asking all of those questions and looking at all.
Okay, and I have a specific question about that. So how does one go to demonstrate to an auditor, right? Because if they've satisfied your requirements, we're assuming they've satisfied DOL requirements. How do they go about making sure they, cover themselves? How do they document that, yes, I've actually provided these things? What's the best practice there?
I mean, we usually like to ask for like a copy of what was sent out. And so normally it's dated so you can see like the time frame of when it was sent, or since lots of things are done electronically now, not just mailed, the email, or looking to see like, the person gets notification from the record keeper or whoever because that's who's responsible for sending it out. But so something of that nature is normally, and then just having the discussions with the clients, placing some reliance on them too, like that, this is when it was sent out and, can you provide me, some kind of support, on when that was done.
And then do you find that typically if the DOL audits them, these are the same questions that they're going to be asking?
They ask a lot.
And a lot more.
Yeah, and a lot more. And so I want to ask you about that. When there is an audit, and sometimes these are random audits, right? But sometimes they're not. Do you guys come in on the side of the client and help them in this situation? How does that work?
We can help them with gathering the information they need. I mean, we can't act like as a representative, between them and the DOL agent or the IRS agent, but we can help them with the information gathering, or if certain questions come up and we need to dig into some details that we kept in our audit documentation, we can do that much.
Yeah. And are you seeing any kind of a specific focus on the part of the DOL these days when they're auditing plans? What are they looking for?
I had a client just get picked recently and they told him it was just completely random because the plan's small and very clean, never had any issues reported, and it was just random.
Auditor wanted an easy one, I guess.
Other times it's because, there's red flags. I mean, of course, I've had some clients who they've had late remittances reported for years now. They haven't gotten picked, to my knowledge. So go figure.
But for the ones that have been picked lately, some of the big things that they ask about are bonding. That's a big thing. You want to make sure they're bonded. They look for investment policy statements to make sure that there's a committee or somebody who's monitoring the investments and that there's some kind of policy in place to make sure that investments that are in the plan are actually viable investments. And untimely remittances of contributions. That's been huge for years. It will continue to be huge for eternity, as far as I can tell.
Yes,
that's
it's
a big,
not going away.
And what we're talking there is they withhold the money from the paycheck, but they don't deposit it into the investment account on time.
Yeah,
right? Yeah. Okay. And why does that happen? Is it a lack of controls?
Yes.
Yes, and yes.
It happens for a lot of different reasons. So the Department of Labor has not put a number of days on that. They won't. They've said they just won't for large plans. And so what the rules say is as soon as administratively feasible. So there's a lot of leeway there we have some clients, it's not administratively feasible until a month later. We're saying, no, I think you can get that done faster. We've trained our clients pretty well at this point to where most of them, as soon as they cut payroll, they're making that deposit. A lot of the third-party providers now will do automatic draws. And so that eliminates some of that issue because they're automatically drawing the money out of their account.
Yeah.
But it happens for a variety of different reasons because there's a lot of leeway there. And what we found is so our client will come up with some kind of procedure. So they'll say, well, the fastest we can do that is 4 days after payroll. And, we'll go with that. And so we'll look for anything outside of 4 days to report as late. I've had DOL agents come in and say, no, I think you can do that in 1 day. And they'll go back years and make them replace lost earnings.
Oh, wow.
Yeah.
Oh, 4 days. I can see situations where someone's like, well, it'd be nice to have cash in my bank account before my loan, before my bank sees what my cash stance is under my credit facility. So let me just kind of slow deposit this, and that those incentives kind of create issues. But 4 days seems, that's less than a week, to kind of get their things in order, and you have the DOL saying, no, you need to get it in there.
Yeah. So the lesson here is do everything you can to avoid the audit. And if you do get an audit, make sure you got everything and all your T's crossed and I's dotted.
Yeah.
So let's talk about some of these fails. This is my favorite part. So when you go in and you see somebody who's out of compliance, what are some of the common things that you find?
Aside from late remittances, the next biggest thing, if not the first thing, would be with the eligible compensation that's used. So the plan document defines like what eligible compensation is that's supposed to be used to calculate the deferral and the match. And so that's where we find a lot of issues because people aren't checking payroll codes or things are getting added in that the plan says should be excluded, like if they have restricted stock or some off the wall, types of allowances. So that's one of the biggest areas where we see issues or compliance issues.
Yeah. And I think this goes back to what I was asking earlier about what are the different functions that are involved in administrating a plan and who are the different players. And we see this all the time where there might be multiple entities involved in providing service, right? So in this case where you mentioned inadequate testing. Well, if you're doing testing at the end of the year and there's nobody advising you along the way, this stuff happens, right? And so there really is no quarterback per se sometimes because every entity is just doing their function and their function only. How does a plan sponsor go about making sure that they're getting ongoing proper advice? Is it as simple as hiring somebody such as yourself who's doing the audits to say, hey, this is what we're going to look for, so let's work backwards here and make sure you have these things in place? Because it's really easy, right? Not because of lack of want to, not because they're lazy, but just because it slips through the cracks. How does a plan sponsor then, going back to this guide that I was talking about potentially, right, the memo or the guide, I want to do this right from day one. What should I do? Should I hire somebody like you to come in and help me set this up?
Well, no, that's what we'll recommend depending on, there's an HR person normally and a payroll person, or sometimes they're both the same person. It kind of just depends on, how many players are involved at the company, but that's where we would recommend they put procedures in place. Check this information quarterly or check it monthly if they're able to do that. But sometimes that's just too time consuming. But do like spot checks, the same testing that we do, pick some people and spot check their information or, check the payroll codes and, with whoever they're using, making sure things are in compliance, but doing it more on a regular basis than just at the end of the year or when the audit comes around.
Yeah, so there's responsibility on the part of internal HR,
right,
to do this. Don't do your internal auditing. Just don't wait for the big audit at the end of the year.
Right.
Yeah.
Yeah. We encourage them to do the same procedures that we do.
Yeah.
But to do it throughout the year, so because there's a lot of things. Sometimes something just goes wrong, and so the DOL has left a lot of room for self-correction. And they would prefer you do that. They prefer you find something that happened, get it corrected, and move on. And so you can do that. They don't want you to do that a year later. They want you to do that as soon as possible. So you have to find it.
Yeah. And so when we're talking about the DOL coming down and saying, okay, we'd rather have you fix this, and we'll move on. Are there programs where, kind of like amnesty programs, where if you self-report things, they'll let you get off a little easier than if they catch it themselves? Do you find that to be true?
What do you think?
Yeah, they have the IRS and DOL both have a voluntary compliance program. And so they do encourage you to go through that for some things. And there's a fee involved, but the fee is a lot less than, penalties would be if they came in and found these things. So entering those programs, usually we'll recommend somebody consult with an ERISA attorney to make that decision. As far as filing, an ERISA attorney will help them file all the documents that need to be done.
So we talked about the late remittances, talked about using the wrong thing. What other stories are there or common things that happen that get people in trouble?
The other area would be with eligibility, with enrollment.
Mm-hmm.
So a lot of
enrollment, especially.
A lot of plans are gradually or have already moved to auto enrolling participants, and so what we've seen is like that's not done in an appropriate time frame. So if it's supposed to be like within 30 days, but then we see it's 90 or 120, what's going on here. And just in general too, like what we've seen is the plan document may state, okay, here's all the individuals who are eligible, but then we see they're allowing people into the plan that aren't eligible yet. So those things come up as well.
So correct me if I'm wrong, but didn't the legislation just pass about what's going to happen with auto enrollments moving forward, or the number of hours for eligibility? Can you shed some light into that?
Just a little.
Yeah.
So that's all. Yeah. That's the Secure Act 2.0. There's a lot of stuff in there. And one of the items is in a couple of years, I think it starts in 2025, any new plans will have to have auto enrollment.
Right.
And so not all plans currently have that in place. We do have a lot of clients that do, but it is much more administratively complicated to have auto enrollment because you have to keep track of everybody's being notified, if they want to participate or they, if they come and say they don't want to participate, that they're not auto enrolled.
Sorry, go ahead, Jack.
No, I was just saying that an auto enrollment is essentially, I just got hired, and rather than me electing to participate in the plan, I'm by default participating, and then I have to affirmatively ask out of it.
Yes. So this is the story I like to tell about my son. Okay. He loves that I talk about this. So he was in college recently, and he worked at North Face as a college job.
Okay, cool.
And so he was there for a long time. He was there about a year and a half, 2 years. And so I got his W-2 at the end of last year to do his tax return. I said, I thought you weren't participating in the 401k. We had a whole discussion about 401k, what that is, all of those things. And he said, I'm not. I said, well, your W-2 says that you had withholding. And he's totally confused. And so I have him go log into his payroll, and he sees, yes, they've been taking money out of his check since May. So what happened was when he turned 21 in May, that was one of the eligibility requirements. He became auto-enrolled into the plan. I said, you didn't get any emails, any notifications? He said, yeah, I got some emails, but I didn't read those. I said, well, they've been taking money out of your check all this time. And then my favorite part is he says, so I'm going to get that back, right? I said, yes. He said, when? I said, when you retire. So he was
4 or 5
upset.
decades, yeah.
Yeah, he was pretty upset about that. But that just proved to me, so I had, me who audits 401k plans, who explained everything to him, and he still was oblivious to the fact they were withholding money out of his check. And so we have a lot of plan sponsors that'll say, well, the employees will let us know if something's wrong. They definitely will not let you. They don't even know.
Yeah. I mean, they might be afraid to bring it up at the beginning. Here I am, a new employee, and I'm going to go and start an issue. I could see that happening. But even like every year I get, our HR is great, but I'll get this email that says, check your pay stub, make sure it's correct. And I bring it up and I don't even know where to start. I could sit there and, maybe it always looks lower than it should be. but no, I mean, because there's all these things taken out, and it's like, I could sit there and, okay, maybe try to estimate or figure out, but to hit it, understand all the percentages that we need to go, that would be really hard it's hard for me. It'd be hard for any employee.
Yeah. So let's talk about educating the participants. What are some of the things when you're looking at an audit that's required as far as providing education to participants? What are some of those requirements that plan sponsors have, if any?
I mean, there's nothing actually required, but, and it's nothing formal that we look at, but as part of when we're looking at their processes and their controls and their workforce, because depending on what type of workforce you have, that depends on how much education you need to do as well. If you have a more sophisticated workforce, you may not need to be as visible, going out and talking to employees. But if we see that that's not happening, we will make recommendations as far as that goes. I mean, employee education is huge because, just like the example I gave, kind of saving people from themselves, if you will, because they just don't know.
Yeah. So when going back to this auto enrollment, so right now, anybody that already has a plan, they're grandfathered in, I'm assuming.
Yes.
But new adopted plans moving forward, they're going to have auto enrollment, which means more work for the HR folks, right? They're going to, so ongoing basis, they have to look at it. And so, as Jack mentioned, by default, they're going to get paycheck withheld.
Yep.
And what's that amount that they're going to get withheld? Do we know? Not yet?
If they had a stated amount. I mean,
No,
normally it's 6% is
Yeah,
what we see.
6%. 3%.
Okay. Or is it like the safe harbor number maybe? Or
Yeah, which would be 6%.
Okay.
Yeah.
Okay. So they're going to have that withheld unless they raise their hand and said, I don't want this. So we have cases where you might have a 401k plan that has no match, but has a safe harbor. So they're still going to get that even if they don't participate. So education becomes important. So going back to this education part then, so there's no requirement, but if you're a plan sponsor and you don't want to get in trouble, you better educate.
Yes.
And when we're talking about educating, what should they do? Just talk about investments. They talk about, what's in the plan documents. What are the topics that they should hit?
I mean, there's tons of consultants and advisors out there that can do this. And a lot of our clients, their third parties offer these services. Maybe sometimes they just don't know about it or don't remember that it's included and, the fees they're already paying. But I mean, it's about, a lot of people just go to there's always a default investment, which may be some kind of lifetime fund, based on your retirement age. And so people will just leave their money in there forever. So the education could be about diversifying, where the investments that are in your plan and where your money's going in, which ones your money's going into. But also, the biggest thing, like how much do you need to be saving? Like, where do you want to be when you retire? Those kind of expectations.
Okay,
and what's manageable, with the life they're living.
And understanding the plan. I mean, that's for all of the employees working with the plan, as well as all of the employees participating in the plan. Just reading that plan document. I mean, there's lots of times we go out to a client, no one has read the plan document. And so especially in a first year audit, we're finding all these things. Oh, well, I just did that because that's how they did it before. No one actually read the piece of paper that is the plan document.
So you're talking about the summary plan description to SPD, or you're talking about the big plan?
The actual
big plan.
plan.
I don't know. I don't know anybody that's read the big plan.
Because we
That's the
caution.
Bible.
Yeah. They're like this thick, right? So I'm going to ask you a question I get asked a lot when I do IRS representation. They'll say, well, are there things that mandatory reporting requirements here? Do I disclose everything to you? So when you do an audit, do you have mandatory, are there things that you have to report if you find?
Yes.
Okay, so let's back up here because I just want to make sure we understand that. So even though you're hired as a third-party neutral reporter or auditor rather, but if you find something, unlike let's say Jack, who's an attorney,
right.
He's protecting his client. When I'm doing representation, there's certain rules I got to follow. But you guys, just like a medical professional, there's certain mandatory requirements. So if you see something that falls in that bucket, you're mandated to report to the DOL.
So there can be like what we call significant deficiencies or material weaknesses.
Okay.
And so those we have to report on, and that gets reported to plan governance. So we don't send a letter or anything directly to the DOL or anything of that nature, but we have to put something formally in writing to plan governance.
So that goes to the plan sponsor,
whoever the plan sponsor, the committee, if there's one, or the CFO, like whoever, whoever's not just the person, not just the HR manager maybe that we've been dealing with, but we need to make sure like it gets notified to, upper management, whoever ultimate responsibility falls on.
Right. So you're not turning them in per se. You're letting them know, hey, we found these things and here's the consequences if you don't correct it.
Yeah.
Okay.
So there's a couple of different layers to it. So there's that. If we find internal control type issues, we have to give that kind of reporting. And so although we are reporting it to management, the Department of Labor knows it exists. They know that we have to do that. And so if they came in to do an audit, they could ask to see it.
The first thing that'd probably be asked for is.
So did you have any reportable findings? And so reportable findings, that's another area where if we see something where they're not in accordance with the plan document, we have to report that to governance as well. But then there's some things that have to be reported on the 5500. And that's untimely remittances. That amount has to be reported on the Schedule H. And there will be a supplemental schedule in the financial statements that goes with that. That's always reported. There's no materiality on that. If it was $10, you have to report it.
Yeah. And that Schedule H, are you signing off on that Schedule H? Or is the plan sponsor?
The plan sponsor.
Okay.
We are signing off on the supplemental schedule that goes with the
correct
financial statements in the audit report.
Okay, got it.
And then there's some other things that could lead to a schedule that's filed, a Schedule G that's filed for some other types of events. And so those things are outright given to the Department of Labor and IRS. And then there's other things that may be disclosed in the financial statements, like bonding is an example, which is also reported on the Schedule H. But if they don't have adequate bonding, that's a note disclosure that gets added into the financial statements. Or if there's some error that's so egregious that it might affect their tax qualification status, that would have to go in the notes to the financial statements. So there's a lot of different ways that we are required or, have to report on things. And then as far as when we report deficiencies, we always give recommendations on here's what you can put into place to correct that going forward. Always having those conversations with management, trying to help them improve.
Okay, so I know we're coming up short on time here, but I'm the plan sponsor and I want this audit to go as efficient as possible, not just because I want to stay out of trouble, but I also don't want to pay as much in in fees to auditors. What are the things that I could be doing to make sure that my audit is as efficient as possible?
I mean, making sure they have everything ready. First of all, whatever's on that request list, and the sample selection request, anything your auditors ask for, making sure that is ready like day one when the audit gets scheduled so you can hit the ground running. But also going back and so late remittances, keeping up with a contribution schedule throughout the year after every payroll, go in a spreadsheet, document the information, keeping track of that. That helps saves a lot of time, and it highlights if there are any late or, errors or anything of that nature, and they can catch those before we catch them and fix them. And just like we said before, like doing the spot checks just throughout the year, just checking to make sure, they're checking the information. And so all of that, should be relatively clean by the time an audit comes around.
Yeah. So finally, I want to ask you a question. We heard a lot about the I forgot the name of the legislation that passed, but the 80,000 new IRS agents. Have you heard anything as far as how much of the new personnel are going to be dedicated to the DOLs? Because to audit retirement plans and such.
I have not, but I can tell you I've had several plans get audited recently. So I know they're back out there again in full force.
And that's because they kind of slowed down during COVID, so they're doing catch up.
Yeah.
And is there a statute of limitations with like the 1040s? Typically, it's a 3-year statute, generally speaking. How far back when they're doing a plan audit and they find something, how far back can they go?
Remember what? 7 years?
7 years?
7 years. So basically, they could go back and, get things fixed and penalties and such. So it really behooves somebody to make sure that they do this right and do it right from the beginning.
Information contained in this podcast and accompanying video have been derived from sources believed to be reliable. This content is not guaranteed as to its accuracy and does not purport to be a complete analysis of the topics discussed. Analysis is based on assumptions that may not come to pass. None of the content should be construed as legal or investment advice. You should consult with a qualified professional before implementing any strategies discussed. All expressions of opinion reflect the judgment of the speakers on the date the video was recorded and are subject to change.